Hello everyone, welcome to Elliottwave.forecast.com YouTube channel. Today is February the 6th and the chart of the day for today is Bitcoin. This is a 60 minutes time frame. We can see Bitcoin ended with 4 intermediate degree at 38,503 and now rallying to the upside. Now that means we are now within the wave 5. And within the wave 5, it should subdivide into 5 waves. So we have ended with 1 here, and this is your wave 2, right? And now we are looking for the upside. So you can see the arrow is turning up. That means we actually technically do not have a bullish sequence, and I will explain what that means. Basically, when the arrow is not green, that means technically there is still no bullish sequence, and therefore there is always a possibility of a double correction. Now, in order to understand this idea, we can zoom out into the 4-hour, and I put down the wave 4 here, which is the same as we can see in the 1 hour before. So if this is the position of the wave 4, then the wave 3 should be here, right? So what we're saying here is that we are now already ending 1 and 2. Let me copy the 1 and 2 to the 4-hour time frame, and you can see the arrow is turning up. Now the reason is because we have not yet broken above that previous peak, which is the wave 3. Now if we do break above wave 3, that means we already open up another leg higher, a higher high, and that means it confirms that the wave 4 is really a wave 4, because until we can literally break above wave 3, you can call it wave 4, which is the most aggressive view, but you don't have the confirmation yet that it is truly wave 4. And so until it really breaks above wave 3, we cannot completely rule out what we call a double correction. Double correction will look like this. This is counted as a W, this is X, and then you got a Y, and then that will be the end of wave 4. Okay, so that will be in the alternate path, which is also possible. But having said that, let me explain to you in the 1 hour time frame what I see. Now if you take a look, okay, so everybody should understand the idea why the arrow is turning up, and because we have not broken above the previous peak. Until it does, we can always do double. We can always do double, right? There is always the alternate, it does a double. Now, in the 1 hour though, you can see the rally after we calling wave 4, even though remember, this is whether this is truly in the end of wave 4 or not. Only time can tell. We still need to break above wave 3. But the rally here, right? You have a rally and you have a pullback after the rally, right? Now, this pullback here, so it ended with 1 here, the cycle ended here, and then you got another cycle down. And you notice here the structure of this pullback clearly is in 3 waves, right? There is no question. This is a 3 waves pullback without any extension on the third leg. Finish at the 100% extension area, turning higher again. Now we've been sideways so far, but from this last peak of the short-term rally, we can clearly see the pullback is not impulsive. So this information alone is going to give you a higher probability that eventually it's going to break above 1 rather than breaking below this 38. So it will be more likely to break above 1 than breaking below 38,503, because this one is corrective. Right? Now, having said that, in the short term, right? In the short term, you need to understand the idea of a higher high and lower low. It's not really rocket science, but a lot of people get confused, because they only look at the latest swing and then thinking everything has to follow the latest swing. Now here we are technically sideways between 1 and 2 in the short term, right? So similar principle that we talk about in the 4 hour applies in the short term. Until it breaks above 1, we don't know whether this is truly 2, right? Simple, right? But a lot of people cannot understand that. Until we break above 1, we don't know for sure this is 2, and there is always an alternate path that we do a double correction, which should be looking something like this, a bigger 3 swing down. Then, but if it does happen something like that, the idea is that because this one is not an impulse, then it is less likely that this is being counted as 1, 2, 3 with a very extended 3, because that's basically what Elliott Wave says. 3 is the strongest, longest, 161.8 extension. Is less likely to be a wave 3 down and break below 1.618, because this one subdivides into 3 waves. So if it does another leg down, just in case, which we are not calling, but it's possible because we have not broken above wave 1, therefore this alternate path always exists. If it does another leg down, then we should be able to find support at the 100% extension again. So this become your first leg, W, this become your X, and then you should be able to find support right here. Between 100%, 161.8%, 40, 163, 41, 412. Okay, so let's hypothetically assume it goes down. Then from here, because the first leg is the 3 waves, it's less likely that it will extend all the way down to 1.618, right? It's less likely to be wave 3 down. And from here, therefore, we have 2 choices. Either we rally higher and eventually break above 1, or we just rally in 3 waves and then go down again even in a bigger correction again. But again, the idea that this is a 3 waves, no matter how complex the correction can be, at this point it is more likely. Notice I'm saying everything is all about likelihood and probability in forecasting and as well as in trading, right? It's never going to be 100%. And so it is more likely to break above with 1 at some point rather than breaking below this 38,503. All right, so that's the idea here, guys. As always, if you want to get more updates, feel free to check our service. We have 14 days trial. Link is in the description of the video. I'll see you all again next time, guys, and have a nice day, everyone.